Hello friends, welcome to my channel, Charting with Christine, where I share my trading strategy and also backtest charts to show you how the setup happens in the everyday price action. If you want to learn technical analysis and also learn to navigate the markets with a clear trading plan, subscribe to the channel, press like, and share the video. So they say the trend is your friend, but how exactly do we follow the trend? Let's say price is going up strongly. Do we buy high or do we wait for a pullback? For me, I prefer to wait for a pullback. And how do we identify support when it's pulling back? And how do we know that the support is holding? So in my trading strategy today that I'm going to share with you, it's a trend following strategy where I use two time frames to help me look for trades. The two time frames consist of a higher time frame and a lower time frame. And the purpose of the higher time frame is to help us identify the trend, while the purpose of the lower time frame is to help us identify a good entry point. So for example, you're using 4-hour as your higher time frame, you can use 15 minutes chart as your lower time frame. Or you can use 1 hour as your higher time frame and 5 minutes as your lower time frame. So how do we identify the trend of the higher time frame? And one way to do that is we can use moving averages. For me, I'm using 8 and 21 EMA, exponential moving average, together with 50 and 200 SMA, simple moving averages. So one way to look at it is when 8 and 21 EMA is above 50 SMA, that's an uptrend. And conversely, when 8 and 21 EMA is below 50 SMA, that's a downtrend. Besides the moving averages, another powerful indicator that I love to use is called the fair value gap. The fair value gap shows you momentum of the price, either buying and selling momentum, and it shows you potential support and resistance when price is pulling back. And before I give you more details of the strategy, I would like to show you how to set up these indicators on the charts. So I'm on TradingView right now, and I can create a new layout with two time frames. Turn the symbol on to sync the symbol in the two time frames. And one of the time frame is 4 hour, the other one is the lower time frame. Change it to 15 minutes on the right. And I can save this and rename it as 4 hour and 15 minutes. And I can turn on the indicators, and over here, I'm going to search for fair value gap Lux Algo. This is my first indicator. And the second indicator I'm using is called the multiple moving averages with the 1.7K users over here. Okay, put that on. And with the settings of the indicators for Lux Algo fair value gap, I am using just the default setting, while the moving averages, I'm going to make some changes to that. So the inputs, the first MA, I'm going to change to 50 SMA. The second one is 200 moving averages. The EMA, I'm going to change it to 8. And the second EMA, I'm going to change it to 21. And show EMA and show SMA over here. And under style, I'm going to change the colors. The first MA50, I'm using green. The second MA, I'm using blue, which is 200. The EMA, I'm using red, which is 8 EMA. The second EMA is cyan. I'm using cyan for 21 EMA. And I'm going to remove the shapes and the Bollinger Bands. So these are the colors that I have been using. You can change it to the same colors as me if you would like, so that you know which EMA or SMA I'm talking about when I share my charts. Or if you would like to change your own colors, that's fine too. Okay, so over here, I have the indicators done. Just if you have a free TradingView plan, you can only have up to 2 indicators, then you might not even need the volume. But if you can have that, that's fine too. So let's say you have these 2 indicators, just these 2 indicators. You can save it as a template and call it FEG plus MA. And with this template, you can apply the same template onto the other chart so that you don't have to key in the settings one by one again. So right now here we have our indicators, the fair value gap and the moving averages to help us identify the trend. Let me walk you through the 3 steps in the strategy. So first of all, with the 4-hour time frame, we want to identify the trend. We use fair value gaps and also moving averages to help us identify the trend. So when you see 8 and 21 EMA is above the 50, that's an uptrend. And also you can see that the price is making higher high and higher lows. So you know that it's a clear uptrend. And after we identified the trend of the higher time frame, 4-hour, we know that 4-hour is in an uptrend. And it's been making bullish fair value gap. That also shows bullish momentum. So what's the next thing we need to do is we can wait for a retest of the fair value gap. So for example, when price was up here, I don't want to chase it when it's so high up and away from the 8 EMA. I want to wait for it to retest and pull back. So over here, there was a big fair value gap here. I could have drawn it and wait for price to come back. So this is a fair value gap. There is a potential support. And this fair value gap also overlaps with the 21 EMA. So over here, when price is pulling back to this potential support, what I want to do on the 15 minutes, which is over here on the right panel, is I want to wait for a retest and see if price is respecting that area. So over here, I can see that there was a big bounce when price came to test this fair value gap. And then what happened next? If you look into the detail here, you can see that price started making bullish fair value gaps on the 15 minutes and retest and respect it. And then it consolidates. And what happened is the 8 and 21 EMA of the 15 minutes starts to cross over the 50. So that also shows that the 15 minutes has changed trend from pulling back, it's downtrend on the 15 minutes, then respect the higher time frame support, and then starts to go uptrend as well on the 15 minutes. So these are the 2 ways of confirmation that I can look for on the 15 minutes time frame, which is my lower time frame. I can use it to look at whether it's making 15 minutes bullish fair value gap that shows bullish momentum, or I can look at the moving averages of the lower time frame, the 8 and 21 cross the 50. So that's entry for me. So for example, over here, when 8 starts to cross 21 and respect the 15 minutes bullish fair value gap, I can take an early entry here. Or if I want more confirmation, I wait for the 8 and 21 to cross the 50 and then I can take my entry over here. So if I enter over here, long position, for example, over here, the price closed above the 8 and 21 and cross over, I can put my entry over there. And I put my stop loss maybe over here, the swing low. Okay. And also I can target maybe the recent high here, or just target 1:5, between 1:5 to 1.5 to 1 to 1.5 or 1:2. So over here, if I just target the recent high here, that will be 1:1.65 ratio, and that would be a winning trade. So this is the strategy in a gist. So for example, let me go through again. Identify the trend of the higher time frame. Wait for the retest of the fair value gap, which is a potential support. And then wait for price to respect this fair value gap here and confirmation on the lower time frame. And on the lower time frame, there are 2 ways to identify confirmation. One is to look at price making fair value gaps on the lower time frame, a bullish fair value gap following the higher time frame trend, or the moving averages to cross over 8 and 21 to cross the 50 on the lower time frame, and that's a safe entry. So this is an example of my strategy. I want to show you another example, which is a downtrend example of my strategy. So over here, we use 4 hour as the higher time frame, and you can see that the 4 hour is downtrending here. How do you know it's downtrending? First, you can see the moving averages. The 8 and 21 starts to cross the 50 SMA, which is a downtrend. And you can see the fair value gap making bearish fair value gap showing bearish momentum. And another way, the third way to identify trend is to look at market structure. That is, you can see that it is making lower low and lower highs. And this is called market structure, showing you that it's bearish momentum, right? So over here, let's say when price was going down here, it was bearish, but it was very far away from the 8 EMA of the 4 hour. I don't want to chase the short here, right? I want to sell, but I don't want to sell it here. So what do? I want to wait for a potential retest of the fair value gap. So when it was over here, I will have drawn the fair value gap here. And this fair value gap, it's a nice area because we know that it overlaps with the 8 and 21 EMA of the 4 hour. And what do is we patiently wait for a retest of that fair value gap, especially the midline of the fair value gap. So when you can see that the price came over to the midline, what happened here? It made a double top. And after it made that double top, it rejected and started making bearish fair value gap on the 15 minutes. So you can see there are actually two fair value gaps here on the 15 minutes. And then price started to make change of trend. You can see that the 8 and 21 starts to cross under the 50 over here. And when the price closed below here and still retested their fair value gap and rejected, that is a very, very nice entry. So when you see that it retested the fair value gap and rejected and the EMA starts to cross under the 50 SMA on the 15 minutes, that's where you can do a short entry because this gives you confirmation. You patiently waited for a retest and you patiently waited for a confirmation on the 15 minutes. The 15 minutes now is downtrending, following the 4 hours downtrend. So you can short here with the confirmation. Even with this first rejection candle of the fair value gap, you can short there. Put your stop loss at the recent high. You can target the recent low. That is a nice 1:2.6. So that is a very nice entry. And of course, following the downtrend, it dropped even more. But this is a nice trade. And this is what I mean by following the trend of the high time frame. Wait for the lower time frame to retest and wait for the lower time frame to also align with the downtrend of the higher time frame and respecting the bearish fair value gap that it has just made and the EMA starts to cross over. So this is a trade, a trend following trade where you wait for a pullback. So I hope that you've learned something in this video where I showed you two examples of the trend following strategy. One was an uptrend and this is the downtrend example. And follow me for more videos as I share more examples in the future on how and where I see this setup, which happens every day on the charts. Okay, so see you in my next video. Thank you, friends.